Welcome to this week's look at the state of the New York City real estate market. This is for the week of December 4th to the 10th. We're going to get started with the luxury market, then we're going to move to the Manhattan market and then the Brooklyn market, and then I'm going to wrap it all up, give you my thoughts and my takeaways. There were 24 contracts signed last week in the luxury market. That is 7 more than the previous week, so nice little pop there. Remember, our luxury market here in New York City starts at $4 million and above. Of those 24 contracts that were signed, 3 of those were in the trophy category, so properties that were priced at $10 million and above. There were 11 condos, 10 co-ops, 1 condop, and 2 townhouses. 15 of those properties were uptown and 9 were downtown. The number 1 contract was a townhouse. It was at 135 West 11th Street. It was asking $32 million. This was actually off market. It was quietly marketed. Last year, it was not publicly marketed anywhere. It is in excellent condition. This is a townhouse that is part of a larger project called the Greenwich Lane. It is a 5-story townhouse. It has almost 7,000 square feet. It includes 5 bedrooms, 5 bathrooms, 3 powder rooms, 2 fireplaces, an elevator, a 462 square foot patio garden, and 2 terraces on the top floor. As I said, this is in the Greenwich Lane. It is a 5-building complex. There are 193 condos and 5 townhouses in this complex. The amenities in the Greenwich Lane include a concierge, a doorman, fitness center, parking, a 25-meter swimming pool, a golf simulator, garden, residence lounge, and a children's playroom. The seller bought this unit from the sponsor for just under $21 million back in March of 2019. The number 2 contract was the penthouse at 993 Fifth Avenue. It was asking just under $20 million. It was reduced from $39.5 million when it was listed at the end of June of 2021. The duplex penthouse was originally under contract in March, but the buyer was rejected by the co-op board, and it was back on the market in June. The apartment has 12 rooms. It has 4 bedrooms, 4.5 bathrooms. The entertaining space downstairs features a 40-foot living room, a gallery, and a formal dining room. They all open onto a 51-foot terrace overlooking Central Park. Upstairs are 3 bedrooms surrounded by terraces. And while the photos may not be entirely clear on this, the unit does need to be completely renovated. The amenities in this building include doorman, fitness center, and storage, and this co-op board does not allow any mortgage financing. If we take a look at the stats for last week, we see that the total weekly asking price sales volume was $205,415,000. The average asking price, $8,558,958. Median asking price, $6,922,500. Average discount from original ask to last asking price, 16%. And the average days on market, 526. Well, very nice to see that rise in contract activity in the luxury market. Nice little pop, 7 more contracts than the previous week. We're going to shift over now, take a look at what happened in Manhattan. Any questions about the luxury market, please reach out to me at Sotheby's or just post them below. In Manhattan, the supply for last week fell by almost 38%. 141 properties came on the market. Contracts signed, however, had a nice little pop of 20%. 174 contracts were signed last week, and the off-market properties fell by almost 24%, 224. The supply for the month was down by almost 60%. 650 properties. This is actually quite normal for this time of year, very much to be expected, and it is what is keeping this market somewhat in balance. Contracts signed also down for the month, 634, down over 23%. Off-market properties, 909, up almost 18%. Surely this is a sign of seller fatigue. We can see by this Market Pulse chart, this is up almost 26%. This reading from last year, we see that this really has not shifted very much in quite a while. This continues to be a market that is favoring the buyers and is proving to be a very difficult market for the sellers. The liquidity pace chart, we know we are in a low liquidity environment, 634. This is the latest on this 30-day moving window of contract activity for the Manhattan market. This is up a little bit, almost 3% from last year, but it is down almost 20% from last month. If we take a look, a little bit of forecasting here at Manhattan listing discounts by price range, we can see that it looks as if the luxury discounts seem to be increasing, while the under 1 million sector seems to be holding fairly steady. Remains to be seen where all of this is going. We're going to continue to keep an eye on this. That's it for Manhattan. As always, please post your questions below. We're going to move on now and take a look what's going on in Brooklyn. The supply in Brooklyn for last week, just as with Manhattan, is down 108, down over 31%. Contracts signed, just as with Manhattan, had a nice little pop, 131 contracts signed last week, up almost 13%. And the off-market properties, 80, that is down a little over 33%. Stepping back, looking at the 1 month look in Brooklyn, 497 properties for the supply. That is down a little over 49%. Again, very much to be expected this time of year. This is likely to continue for the next 6 weeks. So we aren't expecting to see a lot of new inventory coming on the market between now and mid to end of January. Contracts signed also down for the month, 443, a little over 22%. And the off-market properties, interesting, in Brooklyn, 317, also down a little over 21%. If we take a look at this Market Pulse chart, we continue to see that just as with Manhattan, Brooklyn is also in a buyer's market, down 5.3% from last month and up 26.2% from last year. Brooklyn is a slightly different market, performing differently. As I mentioned last week, it really is neighborhood to neighborhood. However, it is both Manhattan and Brooklyn are in buyer's markets, low liquidity environments. If we take a look at this liquidity pace chart for Brooklyn, 443, this represents the 30-day moving window of contract activity for Brooklyn. We see that we are down about 4.5% from last year, almost 18% from last month. This really tells us that Brooklyn is also in this kind of sluggish phase compared to where it has been, certainly in the last couple of years. So Manhattan and Brooklyn are kind of equal in that way. If we look at the Brooklyn listing discount by price range, we see that current discounts may be higher as volume has slowed, and we see that the discounts are showing a rising trend. That's it for Brooklyn. I'm going to wrap this all up and give you my thoughts and my takeaways. We saw a nice little pop in the luxury market. 24 contracts signed for properties priced at $4 million and above. That's 7 more than the previous week. And interesting balance in that grouping. We saw 11 condos, 10 co-ops, 1 condop, and 2 townhouses. And we also saw a nice mix between new development and resales, more of a balance than we are used to seeing. We saw that the supply in both Manhattan and Brooklyn is down. We're not seeing a lot of new inventory coming on the market. In fact, we're seeing a decline in that, and that is totally to be expected this time of year. In fact, expect that to continue for the next 6 weeks, mid to end of January, after which you'll begin to see some new inventory coming on the market. We saw a slight pop last week in both Manhattan and Brooklyn for the demand. But for the month, it was slow. Well, overall, we're in a low liquidity environment for both markets. The off market properties are rising, likely dissatisfied seller fatigue, as I've been calling it. Price action, definitely this continued pressure on the market, this continued low liquidity, if you want to call it that, had an effect on the prices. We're probably down at this point between 8 and 10% across the board. Manhattan is starting to see the luxury market impacted a little bit more. Those discounts are look to be increasing, whereas the under 1 million market seems to be holding a little more steady. And in Brooklyn, those current discounts seem to be rising. Sellers, this is, as I've been saying, this is a tough market for you. And if you want to continue to stay on the market, you certainly can do so. You see that there are buyers in the market. And if you are getting traffic and you are getting offers, or you just really need to sell, then stay on the market, because buyers don't have a lot of choices. And as long as you are determined to sell and your asking price is either being adjusted to be in alignment with the market, or you are currently in alignment with the market and you're getting offers and you're working with buyers to try to make your deal, then why not stay on the market? If you really just feel that this market is not right for you, or you want to take a break, you can always do that. And you can relist either in sometime in February, or historically March is considered the best time to bring your property on the market. Just to know, mortgage interest rates are supposed to be coming down starting next year. So that could be a very helpful thing to sellers and to buyers. So let's hope that that kicks in early spring. Buyers, as I've been saying, you have excellent leverage right now. This is definitely your market. You have maybe not a lot of choices, but you certainly don't have a lot of competition. And you certainly have lots and lots of opportunity if you can find something that you want to buy. Otherwise, you are probably going to have to wait probably for another 6 weeks or so until you start seeing some more properties coming on the market. That's it for this week's look at the state of the New York City real estate market. As always, my thanks to Urban Digs and to the Olshan Luxury Report. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.